What is up, YouTube? Welcome back to Stocks by the Numbers, and today I'm doing just a quick review. How'd I do? And we're jumping into another company I spoke about originally is Endeavor Group Holdings, ticker symbol EDR, listed here on the New York Stock Exchange. I'll put the link to the original video in the description. I break down a little bit of what the company's doing, what they're involved in. The video was one of my first videos back in May, and I actually didn't know how this microphone would turn out when I was talking into it. So I'm actually very timid in that video, speaking slowly and softly. Lacked a little bit of confidence. But, at the time, I was still overall confident in this company, right? The one roadblock it looks like we're seeing here is the fact, in my opinion, is that hyperinflation has just been hitting too close to home. And I feel that personally, that may be the issue as to why some of the revenue has slowly started to pull back a little bit, right? I wouldn't say it raises a red flag. However, it is a rough economic environment, right? And I did mention that even though our entertainment, especially here in the States, is, one of our greatest exports right now, you do have to remember that this is a luxury, and I do speak like that sometimes about certain stocks. And when we're talking about uncertain economic times and hyperinflation, recessions, this is what we're talking about, right? If you had $100, you can either buy food or attend a live event. And obviously, everyone is probably going to buy food. And this is what you're seeing. Those with, decent incomes and discretionary funds, they're continuing to go out and have a good time. Other people who are, feeling pain at the pump, or rent has now gone higher, or groceries are now, 50, 80, 120% more than they used to be. This is how it all comes together now, right? So like I said, the average person, I'm sure you guys can understand that and appreciate that. The average person is going to worry about, their family, their house, their rent, the utilities, food, right? Necessities, right? You're gonna buy diapers for your baby before you buy tickets to the next UFC event, right? I mean, that's common sense. But anyway, this is where I made the video, is right here. The company had just pulled back, basically hitting new lows, and was trading at about 18 and change. And I was very confident that they were going to post a good quarter, and that's exactly what happened. The company ran up to 20 and change. In the short term, we see about 23 and a half, pulled back, rallied back up to almost 26. And then, of course, had a very big sell-off around earnings time and has since been relatively flat. I wasn't correct. Also, I wasn't incorrect. However, I do have to apologize because, if I was speaking highly about the company and you did consider taking a position based on my video, my content, I will be a man. I am honest enough to say, I did potentially call this one incorrectly, because even though, again, they are in some growing industries that are, decent streams of revenue, it is not a necessity. It is considered a luxury. So that's why something like this, I can understand how, roughly 6 months later after I made the video, it hasn't moved too much. However, I also did mention that if you invest into it, you're going to have to give it some time. You're going to have to give it a few years. It's only been, 6 months or whatever it's been. But basically what you're seeing here is in the last couple of quarters, you are seeing revenue drop 1.3 billion, 1.2 billion, and it was maintaining like that $1.5 billion level. Again, reason being, I'm not knocking the events. The UFC is still doing what they have to do, and I'm sure the other outlets under the Endeavor umbrella are, obviously trying to bring in as much ticket sales and revenue as they can as well. But again, it's just not a necessity. Times are rough, and it might have seemed like it was a waste of time, potentially a waste of an investment. However, to be slightly up or even relatively flat, especially in this environment, as I'm sure you all know, could be much worse, right? So we're not sitting here, we're not down 40, 50%. We're basically break even from where we were when I made this video. But, just wanted to give you guys a quick update here. Look at a couple of the numbers. They're trading right now about 2 times last year's revenue with a PE of less than 18. I mean, it still could be viewed as cheap. However, I'm sure Wall Street is waiting for another rebounded quarter with revenue increasing as opposed to decreasing. And of course, they want to see, a quarter like this or this where not only revenue goes up, but of course, net income positivity, as they had a rough quarter back in September here, going slightly net income negative. But this was it was like right around here. Yeah, it was right here at the 12th when they came out with these earnings, and they beat these earnings. I showed that we were in this triangle, and it stayed in the pattern, and then we had a fake break low, and then a fake break high, and then it basically just started to pull back. Again, I might have said also that it would stay in this triangle going into earnings. I don't remember. Again, I'm not here to just say I'm always right, because obviously, this call didn't move too much. But yeah, just wanted to do a quick update. I mean, technically on the technical side, I'm not really seeing much. That actually could potentially be a bull flag in the short term, but again, this is a company that doesn't get a lot of volume as well. It's not on everyone's watch list. So this isn't something that I would necessarily consider playing in the short term. But again, if you watch my video, if I raise your eyebrow and perhaps brought it onto your radar, if you weren't aware of this company and you've been watching it, or you just have a couple of shares, as you can see, not much has happened in the last 6 months. Of course, we would like to make money. However, not losing money is also a positive as well. Again, long term, I still do believe in the company. Overall trading, again, 2 times last year's revenue, so there definitely is a lot of potential to go higher. But I just think Wall Street wants to see some consistent earnings reports here. But then it'll be off to the races. Again, even 50% higher will be $30 a share, which is basically where it was. When it IPO'd, it was hanging out at that level for a while. So, at least getting back to above where these trend lines were initially drawn here into the high 20s, low 30s, I do still see that potential. I really have to say it. I really have to say I do believe in it. We just have to wait for the storm to pass. And, hopefully people's finances aren't too out of whack, and they can continue to enjoy these live events. But yeah, I'll end it there because I'm basically rambling, but I just wanted to give you guys an update, again, from where I made the video and where we are currently sitting now. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. If you like the video, like everyone on YouTube says, give it a thumbs up. Helps out the algorithm, helps me get a few more eyes on the channel. If you appreciate the content I'm putting out, please push the subscribe button. It means a lot to me watching my community grow. And like I always say, I understand markets are rocky, they're volatile, and they're uncertain. So I wish everyone success. I hope everyone makes a couple of dollars, and I'll see you guys in the next video.